Welcome back to the Deep Dive. We take a stack of sources and pull out the key insights for you. Today, we're jumping into artificial intelligence. I mean, the growth there is just explosive, right? But we're looking beyond the software, beyond the algorithms. We're talking about the nuts and bolts, the huge infrastructure behind it all. Think data centers, powerful GPUs, cooling, massive amounts of electricity. It's a really foundational physical thing. And our mission today, really tailored for you as an investor, is to unpack Applied Digital Corporation. That's NASDAQ, ticker APLD. They're a company right in the middle of providing these critical data center solutions. So we'll dig into what APLD does, check out their financials, see what's moving the stock, cover the risks you need to know, and look at its potential. Our insights, they come from digging into their operational data, recent news, financial reports, and market sentiment. Okay, let's get into it. So first off, can you maybe unpack what Applied Digital actually does? Like, how do they make money? What's the core model for an investor to grasp?
Sure. So at its heart, Applied Digital designs, they build, they operate, and they maintain these pretty specialized data centers. Their main game now is really high-performance computing applications, HPC. They basically have two main segments. Historically, yeah, digital asset hosting was bigger. That's providing the space and power for Bitcoin mining gear.
Okay, so like renting out facilities for crypto miners.
Exactly. Leasing the infrastructure. But the big growth story now, and definitely their strategic focus, is AI cloud services. They operate that under the name Sai Computing. And what they do there is offer raw computing power, mostly through GPU clusters, graphics processing units, and all the infrastructure needed for demanding AI workloads.
So they're providing the muscle for AI models.
That's a good way to put it, the digital muscle,
Oh.
yeah. The company's pretty new, actually. Founded March 2020, based in Dallas. What's interesting for investors is their position. They're right in this booming digital infrastructure market, specifically AI, and they've really focused on high-density computing.
High density. Why is that important?
Because AI, especially training large models, needs tons of power packed into a small space. It's technically challenging, and that's where they specialize.
Got it. So that dual strategy, but really leaning into AI now, that sounds like a high growth play. But growth usually costs money, right? So when you look at the financials, what are maybe one or two key things an investor absolutely needs to know right off the bat, especially given they need big investments?
You nailed it. It's definitely a story of rapid growth, but also significant spending. Revenue first. Fiscal year 2023, they pulled in about $138 million, which was, get this, a 457% jump year over year. Just incredible growth.
Wow, okay.
More recently, their fiscal 24 third quarter revenue was about $43 million, still up 21% year over year. And analysts, they're estimating around $58 million for Q4. Yeah. So over the last 12 months, you're looking at about $146 million in revenue.
Okay, so the top line is definitely growing fast, driven by that AI demand you mentioned.
Primarily, yes. Infrastructure expansion and that huge pull from AI and HPC. Now, profitability, it's improving. Gross profit in FY23 was around $37 million, like a 27% margin. By Q3 of FY24, that margin improved to almost 33%.
Better margins, that's good.
It is. It shows the underlying operations are getting more efficient. But, and this is the key point, they're still investing heavily. So net losses. FY23, the net loss was pretty big, minus $180 million. But here's the positive signal. In Q3 of FY24, that loss shrank quite a bit, down to about minus $11 million.
Okay, much better than the quarter before that.
Exactly. It was over $30 million negative before that. So, yeah, the losses are mainly because of building out these huge data centers and operating costs, but shrinking losses is definitely what you want to see.
Right. So improving losses is encouraging. But with those big investments, what about cash flow and debt? Are they funding this expansion themselves or still needing outside cash?
Yeah, it's a mixed picture on cash flow, but it's getting interesting. The EPS, earnings per share, also shows that improvement. Went from minus $1.09 in FY23 to just minus $0.10 in Q3 FY24.
Okay.
Now, cash flow from operations, this is important. It actually turned positive in Q3.
Ah, okay. So the core business is starting to generate cash.
Precisely. That's a really crucial milestone. But their free cash flow, FCF, which accounts for those big capital expenditures, is still quite negative, like minus $153 million.
So still burning cash overall because they're building so much.
Exactly. That implies they still need external funding, likely debt or equity raises. And yes, they do carry significant long-term debt to fund this construction.
Which matters more with higher interest rates these days.
Definitely. It's something you have to factor into the risk profile.
Okay, so summarizing that. rapid revenue growth, particularly AI-driven, improving profitability trends, shrinking losses, positive operating cash flow, which is a big step, but still investing heavily, needing capital, carrying debt. A classic growth company profile, maybe.
Very much so. High growth, high investment.
Okay, now let's really dig into that strategic shift. You mentioned moving from Bitcoin hosting towards AI and HPC. How much of that is about getting more stable revenue, and what's the latest news that's got the market excited? This feels like where it gets really interesting.
Yeah, it absolutely is. The shift is driven by, well, two main things. One, definitely reducing exposure to Bitcoin's wild price swings. But more importantly, too, capturing those larger, potentially more stable, high-value contracts in the AI space.
Makes sense.
Bitcoin hosting used to be bigger, but now they are all in on expanding AI and HPC capacity. And the recent news flow, it's been pretty strong, especially June and July this year, 2025.
Like what are the headlines?
Okay, so July 26th, they announced securing over $30 million in new AI data center contracts, expected to be up and running by March 2026.
30 million, that shows real demand.
Definitely. Shows they can land big deals. Then just before that, July 17th, they launched a new website specifically for their AI cloud services, Sai Computing. Better marketing, easier access for clients.
Polishing the offering.
Right. And this was key for future revenue. July 10th, they finished installing over 800 NVIDIA H100 GPU clusters.
Ah, the H100s again. Those are the hot ticket items for AI, right?
Absolutely critical, super high demand.
Mhm.
Getting those online directly boosts their capacity to generate AI revenue. And this backs up something they announced back on Juneteenth. They said over 90% of their AI cloud capacity was already pre-booked.
90% pre-booked. Wow.
Yeah, that's huge. It proves their strong market pull and their sales team is executing. So taken together, these announcements, they point a picture of really strong positive momentum for APLD. Revenue growth, path to profitability, it's looking clearer.
Okay, that's a very compelling narrative, especially that pre-booking rate. So how's the market valuing this story? What do the investment metrics and sentiment look like right now?
Good question. As of, say, late July 2025, the market cap was hovering around $600 million, just under that, valuation metrics. Well, the PE ratio is negative because, as we said, net losses. So you can't value it on current earnings.
Right, it's a bet on future earnings.
Exactly. The price-to-sales ratio, PS, based on trailing 12-month revenue, is around 4.1, which for a high-growth tech stock isn't, outrageously high, but you have to remember those losses. A broader metric, EV to revenue, which includes debt, is closer to 9, maybe a bit more telling.
And things like return on equity.
Also negative, yeah, around minus 45%. Reflects the losses. But what's really driving sentiment is the analyst outlook and the whole AI narrative. Zacks Equity Research, for example, has a strong buy consensus on it. Their average 12-month price target is $12.50.
And the stock was around $5 recently?
Yeah, around $5.18 when that target was noted. So that implies like 140% upside potential. That's significant optimism.
Huge optimism, driven by AI expectations.
Entirely.
Yeah.
The market sees the massive demand for AI infrastructure and expects providers like APLD to benefit hugely. We also see strong institutional interest. Fintel data showed around 340 institutions holding over half the company's shares. Big names like Vanguard, BlackRock, Geode Capital.
So the big money is interested.
They are, and increasingly buying. But there's always a but, right? There's also significant short interest.
Meaning people betting against the stock.
Correct. Fintel showed about 12% of the float was short. That's a pretty high number. It means a decent chunk of the market is skeptical or betting on a price drop.
And high short interest can mean more volatility?
Absolutely. It can fuel sharp moves down, or if the price goes up, it can trigger a short squeeze, pushing it even higher, faster. Adds complexity.
Okay, so a mix of strong institutional backing and significant short interest. Definitely a stock with differing opinions. Now, we've touched on some risks implicitly, like the debt and losses. But let's lay them out explicitly. What are the critical risks you, the listener, need to really keep front of mind with APLD?
Yeah, super important to balance the excitement with the risks. First, as we discussed, high capital expenditure and debt. Building data centers is incredibly expensive. They need tons of money, and they've taken on significant debt. High interest rates make that debt burden heavier.
A necessary evil for growth, maybe, but still a risk.
Exactly. Second, persistent net losses and the uncertainty around profitability. Revenue growth is great, but they're still losing money. When will they achieve sustained profit? That timeline is still uncertain.
Okay, what else?
Third, share dilution risk. To fund all this growth, they issue new shares. The share count went up by over 50% in the last year alone.
Ouch, that waters down existing shareholder stakes.
It does. And future fundraising could be more dilution. Fourth, intense competition. This is a hot market. They're not alone. You've got the hyperscalers, AWS, Azure, Google Cloud, who have massive scale, then specialized AI cloud providers like CoreWeave, plus traditional data center companies trying to pivot. APLD needs to keep its edge.
That sounds like a tough neighborhood.
It is. Fifth, power supply and cost volatility. Data centers are power hogs. Their profitability is super sensitive to electricity prices and availability. Any disruption there hurts.
Makes sense. Power is a huge input cost.
Huge. Sixth risk, rapid technological change. AI hardware, especially GPUs, evolves incredibly fast. Think NVIDIA releasing new chips. APLD has to constantly invest to keep its tech current, or risk becoming obsolete.
It's like running to stand still almost.
A bit, yeah. Seventh, some remaining Bitcoin price exposure. They're diversifying, but Bitcoin hosting is still part of the revenue mix. A big crash in Bitcoin could still impact them. And finally, that high short interest we mentioned. It signals market skepticism and can definitely add to short-term price swings.
Okay, those are definitely serious risks to weigh. High capex, losses, dilution, competition, power costs, tech changes, Bitcoin shorts. A lot to consider. So with those challenges, what are APLD's actual competitive advantages? What are their internal strengths that might help them win?
Good points to focus on. Their edge comes from a few areas. First, that AI HPC specialization. They're not just generic data centers. They're building facilities specifically optimized for these high-density, power-hungry AI workloads. That focus is a differentiator.
So tailored solutions, not one size fits all.
Exactly. Second, strategic locations and power access. They actively seek out locations with abundant and crucially affordable power contracts. That's a massive potential cost advantage. Third, their rapid deployment capability. In this market, speed matters. Being able to build out capacity quickly to meet the surging demand is a key strength. They seem to be proving they can do this.
Which ties into that pre-booking rate you mentioned.
Precisely. That proven demand, getting over 90% pre-book, shows their offering is attractive and their sales team can close deals. It validates their strategy.
Okay, those are external advantages. What about internally, strengths within the company?
Internally, you look at their human capital. They need expertise in data center design, construction, complex operations, HPC management. They seem to have built a capable team. Their R&D efforts are also key, focusing on operational efficiency, advanced cooling tech, power management, and optimizing their software stack, site computing. It's about delivering performance efficiently.
Constant improvement.
Right. And finally, management strategy and execution. You have to give them credit. The pivot from Bitcoin to AI seems successful so far. They're expanding aggressively, landing big clients, and actively working on improving financial metrics. That shows competent leadership.
So specialization, location power advantages, speed, proven demand, plus internal expertise and execution. That's their counter argument to the risks.
That's the bull case, yes.
All right, let's switch gears slightly. What about the stock chart itself? What does the technical analysis tell you as an investor about recent moves and maybe where it could go?
Okay, looking at the chart, APLD has been, well, highly volatile since it came public. Big surge, late 2023 with the AI hype, then a pretty steep correction. It's definitely not a smooth ride.
A roller coaster.
Pretty much. But more recently, since around May 2024, the stock's been trending up again.
Yeah.
That seems tied to the better Q3 results, those reduced losses, and all the positive AI expansion news we talked about.
So fundamentals are maybe starting to drive it more.
It seems that way. There's been particularly strong upward momentum just in July 2025, likely reacting to those new contracts and the H100 installations. In terms of levels, there seems to be pretty solid support down around the $4 to $5 area. On the upside, near-term resistance might be around $6 or $7. Longer term, those previous highs above $10 are what bulls would be targeting.
And volume. Is the volume confirming the moves?
Yes, that's a positive sign. The reason price surges have generally come with significantly higher trading volume. That suggests conviction behind the buying interest.
What about indicators? Moving averages, RSI.
Well, there's potential for a golden cross forming, where the shorter-term moving averages cross above the longer-term ones. That's typically a bullish signal for technicians. Indicators like the RSI, Relative Strength Index, it's likely been pushing into overbought territory above 70 with the recent run-up. That often suggests the stock might be a bit overheated short-term, maybe due for a pause or pullback.
So strong momentum, but maybe needs to cool off a bit.
Potentially, yes. And the MACD indicator, If that line is above its signal line and positive, technicians see that in a strong buy signal, confirming the upward trend.
Mhm.
So the technical picture. It looks like the stock is trying hard to reverse its previous downtrend, clearly fueled by the AI story and improving fundamentals. But you need to watch for signs of short-term exhaustion after the strong run.
Okay, great technical overview. So let's bring this all together. We've covered the business, financials, AI shift, news, valuation, risks, strengths, technicals. What's the bottom line for you, the listener, thinking about Applied Digital as an investment?
Okay, pulling it all together, Applied Digital fundamentally is a really compelling but definitely speculative growth stock. It's positioned smack in the middle of this explosive AI and HPC infrastructure buildout. That's its biggest draw. The strong revenue growth is undeniable, and those signs of improving profitability, the shrinking losses, the positive operating cash flow, those are really key positive developments.
Right, so key positives. Direct AI leverage, huge growth, improving bottom line metrics, strong analyst targets, institutional buying.
Exactly. Those are the main points for the bull case.
And the key negatives, the risks we need to remember.
On the flip side,
Yeah.
still losing money overall, net losses, needs a lot of capital, which means high debt and potential share dilution, faces intense competition, vulnerable to power costs, still some Bitcoin link, and that high short interest adding volatility.
So it really crystallizes as that high risk, high reward play.
Textbook definition, almost. Its entire future really depends on converting that impressive top-line growth into actual sustainable profits. That's the hurdle they need to clear.
So what specific guidance would you give an investor watching APLD? What should you be tracking?
Okay, a few key things to watch. Number one, monitor profitability and cash flow like a hawk. When or if does APLD achieve consistent net profit? And crucially, when does free cash flow turn positive? The next earnings report, Q4, probably mid-August, will be absolutely critical for this.
Got it. Profitability first.
Yeah.
What else?
Number two, track the AI HPC revenue growth. How fast is that specific segment growing? Are they signing more long-term contracts with significant clients? It validates the core strategy. Number three, keep an eye on debt and financing. How are they managing their debt? Are they raising more capital? If so, how? And what's the impact on existing shareholders?
Makes sense. Manage the balance sheet.
And number four, continuously assess their competitive edge. Is their specialization holding up? Are they keeping pace with technology? How are they differentiating against the big guys and other specialists? The landscape changes fast.
Excellent points. Watch the profits, watch the AI growth, watch the debt, watch the competition. So it seems clear. Applied Digital is definitely a stock for more aggressive investors, people comfortable with volatility who are making a strong bet on the long-term future of the AI industry and APLD's role in it. Requires real diligence on the risks and likely a long-term view.
That sums it up perfectly. Not for the faint of heart, but potentially significant upside if they execute well.
As we wrap up, just think about the sheer scale of computing power that the next generation of AI is going to demand. It's almost mind-boggling. It's not just the AI models themselves, but this foundational layer, this physical world of data centers and power that companies like Applied Digital are building. It really makes you wonder how this ongoing infrastructure build-out will continue to shape our digital future, doesn't it? What comes next? If this deep dive into Applied Digital was helpful, please subscribe.